Hello traders, this is Dan, and in this Master Trader Weekly Trade Review, I'm going to show you an awesome strategy that we use for option traders on shorting out-of-the-money puts and put spreads during panic setups. And the panic setups can happen in different flavors, of course, but the key to this lesson is there was a lot of fear, a lot of sell-off, a lot of bearishness with people dumping these stocks in the Bitcoin sector, which set up incredible opportunity for us as option sellers using the Master Trader strategy. So this is the Bitcoin, the CME Bitcoin Futures. Last week, I don't know what the news is, I don't follow it, and it just steady liquidation, panic came in, and this thing's dropping from 40,000 to 25,000. So the setup that we have in these particular trades I'm going to show you is called a Master Trader Climactic buy setup. And very simply, it's just a bunch of fluid moves down, lower low, lower high bars. It's getting dumped, and it's far from the 20 period moving average, this blue line, and we're looking for some type of a bullish reversal. This is our Telegram alert that we send to subscribers, and this is actually selling options on the Bitcoin futures. Now you need a special account to do that, but I'll show you some stock trades that we did based on the sector tanking. But this is a format of every one of our trades. We give the date, the symbol, the strategy, what we're doing, the technical setup, climactic buy setup, far out of the money premium trade. So Bitcoin, let's just call it 27,000 when we put this on. We shorted a May, which was 2 weeks to expiration, 14,500. So that's 50% out of the money. We took in $130 per contract. And I say right here, look, this is a little higher risk. The spreads are wide. Only do this if you're willing to own Bitcoin with a cost basis of the short strike less premium received. MicroStrategy is in the space. It owns a lot of Bitcoin, so it moves with it. And same setup, climactic buy setup, multiple bars down, pickup in volume, panic situation. We waited for the bullish turn on this day. And these were the two trades that we gave to two separate advisory letters of ours. One is the weekly options trader, as you see right here in the Telegram alert. And so the stock, let's just call it, was trading at 160. We shorted the $50 puts for 90 cents a share. For someone new to option trading, what that means is we're taking in 90 cents a share, and we, from the put buyer, and we're agreeing to purchase MicroStrategy stock on or before expiration, which was 1 day later. We put this on May 12, and these expire 1 day later. We're agreeing to buy MicroStrategy at $50 a share. We've taken in 90 cents a share, so that would give us a cost basis of $49.10. Same setup, climactic buy setup. Volatility in the whole sector is spiked with the Bitcoin sell-off. And look, folks, the short strike was 67% lower. Had I started this video saying, hello traders, I'm going to show you a strategy where the stock can fall 67% against you in 1 day and you still make $900 profit, I would have immediately hit the delete button as fast as I could, because I would say you're a charlatan, snake oil salesperson. I don't want to hear another word coming out of your mouth. But look, it is right here. This is real. We give these trades. I was in this trade myself. I was in both of these trades. And so we use our approach, wait for stabilization. In the same day, we close this trade out at 10 cents. So one contract represents 100 shares of the underlying. So I'll just use simple math. If you sell 10 of these $50 puts, $900 hits your account immediately, and you're obligated to buy 1,000 shares at $50 strike price on or before expiration 1 day later. We closed it at 10 cents, so we booked $800 as a day trade. This one, our master trader swing and options trader, where we buy and sell stocks and options, we went out 1 week further. So the May 20 was 8 days to expiration, but we sold the $20 puts 87% lower from where the MicroStrategy was when we entered it. Same setup, far out of the money trade. And this is a little more advanced strategy. What we did is we took our profits by hedging with a higher strike, so that in essence, as you can read here, gives us a free bear put debit spread. But I'm not going to get into that right now. If the market crashed, then we had an opportunity to make additional money on the downside. Let me show you this was the actual quote screen of MicroStrategy, 2 day to expiration. So MicroStrategy, here's the actual dollar. I think I said 160 on the other slide, but 151.83. Why am I showing you a picture of a hurricane here off the coast of South Florida where I live? Here's why. When we do these short premium put trades in times of massive panic, this is what it kind of reminds me of. That pretend you see this hurricane coming ashore and you call your insurance broker. Hey Jim, I need some insurance. I forgot to renew my hurricane insurance this year. Will you sell it to me? Yeah, Dan, I'll be happy to. But guess what? You better bring 3 checkbooks when you come down to my office, because this premium that I'm going to sell you, you are not going to like the cost of it, because the hurricane is right offshore. So here are my $50 puts that I just showed you on the prior slide that I sold for 90 cents position. That's me. And people buy put options. These are put options to hedge or speculate with a bearish bias. The hurricane's there. They think MicroStrategy is going down. But look, it's already fallen from $500 to $140. We use our approach to say that this storm is veering away from South Florida now. So yes, we will take your high insurance premiums, i.e. put premiums, and put them in our pocket as profit using our technical approach to shorting options and very expensive options in this approach. This implied volatility explodes of these options when risk rises. As you can see here, 658% implied volatility is massive, and that increases the prices of these puts, of the premium, and we sell those using master trader strategies during fearful times. Here's another example. Coinbase, same sector, moves with Bitcoin. This one we actually did the day before on May 11. We sold the $40 puts down here, 65 cents, and we closed those out at a nickel. And then on the next day, when we got more stabilization here, you can see May 12, we went $10 further out of the money, another week to expiration, $10 lower, and we got $1.20 a share. Climactic buy setup, here's a midpoint, and we closed those at a dime. So amazing short-term profits. These premiums will contract as volatility contracts, as time decays, and finally as the stock moves up as we intend, or even stabilizes, those expensive premiums that we sold will rapidly deteriorate. Here's one more example. It's not in the Bitcoin space, but we did it the same day here, May 13. And this is just a steady, nasty liquidation, Carvana. But notice the volume here, this massive record volume, and it closed with a bullish engulfing bar. The next day, gapped up a little bit, and we sold the 27.15 bull put credit spread, took in $1, 7 days to expiration. As always, we give the setup, climactic buy setup, and bullish engulfing on increasing volume on earnings far from the 20 MA. There you have it. We closed the very next day, or I'm sorry, it was over the weekend. So on Monday, from Friday to Monday, we closed half at 40 cents, half at 20 cents, average out 30 cents. We made 70% of our maximum value in one trading day. Hope that helped. If you want to learn how to do this yourself or just get fantastic trades like this, go to mastertrader.com/education. Since we're technical based traders of everything we do, check out my partner Greg's technical analysis courses. That the better you know technicals, the better option trader you're going to be. And you can hit this Master Trader options tab, and you can see our seminars on both directional buying options, and as we went over in this lesson, selling options around compelling patterns. As always, email Greg or me with any questions. Good trading, and look forward to seeing you in the next trade review.